Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Tuesday and definitely a little bit of a crazy day. Came in today. What were the futures doing? The futures were up small. You had actually, up. I don't even remember. That's how long of a day it was. Actually, the futures was down a little bit. The futures were down like 4 or 5 handles, and Apple was up like $1.50. Then something smelt and felt a little weird. The last 3 quarters, you had this big gap up on Apple. It was pretty much saying that. I know you shouldn't trade Apple, you should just own it, like a lot of people say out there, which is true. If you owned Apple for the last decade, you probably did better than the way we trade it technically and actively, and whether we hold it for swing trades or whatnot. Definitely owning it and working somewhere else might be better, but that's besides the point. But there was ways to make money. You could have shorted Apple off the open. It was pretty quick. Once it didn't hold that 133, we talked about how 133.50 was a key level, was the prior high. If you can't hold the momentum level, momentum leaves, and not only did it leave, it went as low as 129.50, which I think a lot of guys had. Let's just get to it. Had a nice buy, because that was the 8th. Everyone's like, Redler, what's the level? And I was like, well, we did not hold the momentum level, so let's see if it holds the 8th day, which happens to be right here. Okay, which we were extended from. If you remember, we had a nice swing trade from here into earnings, which was good that at least it gave us that prior. And now, you have this wide range bar, and we got to figure out what's next. Different than this one. This one, you had a wide range bar to the downside, but you still held the majority of this gap. Okay, on this earnings, you had a close near the highs, but you held the gap. Okay, and obviously the stock was lower then. So, what does this mean? It just means it's not the same type of trade. At this point, what do you know in Apple? You have the low here, which is 129.57. You have the high here, and it's a pretty ugly candle. It's going to have to take, at least half of it back before it starts to repair. And we'll see what it does. It's probably going to be on the B list for a little while until we figure out what's next. Because if it breaks this, then you have the 21-day and the 50-day all the way down there, which, is still lower. I still think that, with the buyback, the dividend, the products, I would find it hard to believe that it's game over in Apple, but this type of bar changes it. I remember on this one, I got long here the day after and said I will give it to the low, and then in here we were talking about buying the 120.50s for a breakout. I remember the same thing happened on this earnings, was long versus this, and then it trended higher. Now, you really don't have the same type of setup where if you trade actively, you could say, okay, I guess you could say I'm going to be long versus 129.57, but there's no shorts trapped, and there's no one thinking it's going to be making new highs tomorrow because of this wide range bar. So we'll see what happens. Just that's what it is. As far as the indices, that was a good trade. That again, we opened up above yesterday's low, and then once that Iranian ship thing hit and this and that, traded through it. I know in the VTF I was actually short. Yes, Red Dog was short. We short the spiders, made like 50 cents, and then we got long it below 209.30, thinking we'd get a bounce. I didn't think we were going to recover the whole 9 yards. But if you look at the chart that I put on Twitter, basically same. It's what I wrote this morning. Here is your uptrend. Here is the 21-day. We said if it's going to be any good, we should hold somewhere between 295 and 2103. We held it. So if you bought into that area or covered your short from this Red Dog reversal yesterday, you covered it and you made your money. If you got long into here or you waited for it to reclaim the prior low, which is another Red Dog reversal the other way, 2107, you were able to make some money. Spiders, you take a look at it in big travel ranges, but all in all, it did the same type of trend that it's held. It held the 21-day, okay, shook the tree. You could have bought it when it reclaimed this 210.54 with a stop at the low of the day. And who knows, maybe you didn't even take it home long. You took your 90 cents and that was it. But if you actually had a strategic move off the lows here, you didn't have to wait. And this was the spot. We did the same thing here, and I think we even looked at it there. So this has been holding. It's still in this ascending channel. So we'll see what happens. And if it continues to hang in there, perhaps we do make new highs again. The Russell helped to lead the way. I know it was weaker yesterday, but if you didn't get caught yesterday, you had a nice trade today. This went green well before most other indices. So from 124.04 after holding the 50-day, it went as high as 125.18. That's $1.15, of reward and typically you take a third home. You don't have to if you're just day trading, because you could have, shorted here and made just enough money without going home short, or you could have shorted here, taking a third home long, short, made your money, flipped, and then maybe you take a third home long, because that's what the strategy says, and you'll see where we open tomorrow without even having to break out, just taking those type of trades. So, you saw a lot of that. You saw that same thing with the bios, broke that 347, could have been short, you could have traded the ranges, and, but ultimately, high beta tech was definitely a little different. Amazon, I talked about how it was different than last quarter, that seems like it can go into the gap. Some guys made some money short. Okay, a little different. Look at this gap up right here. Held in there, traded above the earnings high and trended. This one gapped up and then basically, was weak yesterday, was up $1 and then traded below 437 and is in the earnings gap. It has a whole big scenario here. So if you made money short here, it was calculated at least. So now you'll figure out where maybe it stops or not. Who knows? This might be an exhaustion gap. That's why gaps tell you a lot. This one told you it was strong enough to hold there was power. This one's telling you not so fast. Netflix is acting a little bit better, but I would just be a little careful as high beta tech is losing some altitude. It's still in here, so I would say this is still one of the chosen ones. Google, to me is a broken name. You got to be very careful. Went up on the poor earnings, but then wound up going into the gap the next day, and it's still trickling in. And I would take trades, and don't be over enamored here. Don't overtrade names that you're not comfortable with or that are somewhat broken, that are not A+ trades. So now we go to social media. Facebook wasn't enough on earnings day. We talked about it. You had that red dog reversal at 84.74, which was right here. We talked about, would it be enough to trade above this, trade above that? I thought perhaps it would be, because that was my concept and thesis. But on earnings day, when it went above it and failed, that changed. Haven't really been long Facebook since. Was long it from here to there. Was long it here into there. And now I'm just avoiding it and waiting. And now it's trying to hold the 50-day. Okay, it gave a few trades off of it today and then got weak when that Twitter news came out. And here's a little bit of a bear flag continuation. And now you're gonna have to see whether or not the trend, which it's been in for a long time now, it's been in a trend since here, stays intact. And it's it's still got some room to it, so it's still fine. Look at the move it's had since the cup and handle bottom. But on a short-term basis, it's looking a little wishy-washy. So now there it comes to Twitter. I have a lot of different rules when it comes to earnings. I never really stay long the stock into earnings, and I don't really ever really trade it the day of, because something could always happen. Sometimes I do it in the morning, but in the afternoon or midday, institutions might get a little word of what's going on. They might try and square up positions, one way or another. So if it's weak, all of a sudden it gets strong. If it's strong, it can get weak. I guess nowadays in the world that we live in, you could scrape earnings and get the news, and it could hit the tape beforehand. And Twitter, coming into the year, was my social media name of the year. Okay, gave you the first move from 37 to 52. So everyone was like, Red Dog, what do you think this time? I'm like, it's not going to be as easy. I have less options on than I had last time. It's less wound up, and we'll see. Maybe I'll trade it after. So about a half an hour into the end of the day, word got out that the earnings missed, and they gave all the metrics. It was down 2, and you had about 2 minutes to make a decision what you want to do. So after seeing it down $2 and at 49, I'm like, you know what? I don't think it's going to trade above 52. The options I bought at 2 and change are now 80 cents. Let me at least just salvage that instead of a zero. If you salvage money when you can instead of zeros or not doing so, chances are it adds up at the end of the year, and I got out. And some guys got short. Some people were in the stock, which if you trade stock into earnings, they had some time to get out. It goes with the whole landmine concept. If you step on a landmine and there are 100 people on the landmine and you think it might be a landmine, just get the hell off it. Okay, so this way you get away from it. And if it doesn't go off, okay, no one dies. Good, we don't want people to get hurt. But if a landmine goes off and you're away from it, maybe you get some collateral damage, you lose a finger, you lose an arm, but you don't blow up. So you had about 10 minutes, not even 10, sorry, 2 minutes to make a decision. If you were long Twitter, do you get out? Or maybe do you buy puts, or do you sell calls? Or if you're long the calls, do you say, okay, this doesn't smell right, let me just get out because it's not going to be perfect in order to trade above the pivot, which was 53-ish. So Twitter got halted, and P.S., The report was really not good. They lowered a lot of different metrics. The MAUs also, can't even draw that, you know. So this was that. It looked decent going into it. You know, this was the move off of, off of that 37, 38, and then, you know, it broke. It's unfortunate. You know, it was a bad call, but all it was a call, and all things are calls until the market confirms it. And up until yesterday, it felt as if, you know, it was set up enough above the moving average to go. But when you have event risk, which is what earnings are, that's why you take calls or puts. You don't sit in it. If you've been sitting in it long since, you know, the report, and you didn't take any off, you know, you're probably just giving back and you're almost back to even. You'll see what happens tomorrow. But as of now, huge down day, lots of damage. It's unfortunate because, you know, it feels like some of our go-to names are going to be broken for a while. This is now broken. If it doesn't pretty much, you know, take back half of this, saying this was, you know, over emotional, it's going to just, it's going to be out of play for a while. So it feels like now, you know, Facebook's a little bent. Twitter's now, we'll see what happens tomorrow. Apple, no earnings gap, so it's going to be range bound, you know, not a trend maybe. You know, you have Amazon in the gap, you have Google blah, you know. Banks were stronger today. We'll see, you know, maybe they're sniffing that, you know, Fed's going to be a little bit more hawkish and dovish tomorrow. They reversed today. We'll see where that leads to. You know, you had a little red dog reversal in Goldman Sachs today where it traded below the prior low and came back above it. So if you weren't in it and you were looking for it, I got caught up. I didn't buy it. That's your day one maybe, and then you'll see if it gets any better. Okay, this is day one. You'll see if it builds. I think J.P. Morgan also had a day one. All right, you'll see if this builds. After earnings, they sold the strength, and now trying to build here. There's a red dog reversal from 64. If you bought it when it came back above 62.31, you know, you're up 40 cents, and now you'll see if these things could build or not. Oil still not doing much. It's still tight though. Didn't sell off, but it also didn't have enough power on that little Iranian news to go. I guess see what happens here. Can it hold this upper flag? Can it hold this trend off the lows? So we'll see. It's at a key level. Lots of shorts in here too. So I'm not sure if they're gonna have enough. If there's gonna be enough, some kind of bullish. I don't even know what, you know, supposedly the fundamentals are so bad. So many inventories, so much, you know, supply on boats hanging out in the oceans. Who knows? But at this point, all you know is this is resistance. If it were to get above 20 and you see a lot of volume, maybe you get another move. If it were to break below this 1920, you know, chances are this move off the lows, which is about $4.50, could retrace, you know, further. So we'll keep that on the radar. So all in all, lots of action, lots of ways to trade the ranges. You know, last week we were up, you know, 45 handles or so. So yesterday the gap open was sold. You know, so if you sold once we broke back below 2120, you were able to buy today below, you know, 2100 or even 2095, and then you were able to play the ends of the envelope. So, you know, you didn't have to play the middle of the envelope. You just play the ends, you know, which are at least defined, and then, you know, you have a lot of individual stock action, which is what you have during earnings season. Not all stocks are created equal, and that's the way this year has been. It hasn't been a market-moving year. It's been a stock-specific concept, strategy-specific tape, and hopefully you've been benefiting from it and you know, making progress. I think a lot of guys had a good day today. Most people came in pretty flat and were able to take advantage of buy the dip, and some people were able to take advantage of the volatility and no flow. Some people on the site were like, this, you know, company that scraped the news on Twitter did it on Microsoft, and no joke, it's probably not bull. And you had 2 to 3 minutes to get short. And if you got short during that time period, you did great. Or if you just, you know, leveled out positions because you weren't sure, you did better than getting caught. So there's always ways to make moves, and, you know, having 1,000 eyeballs is much better than having 2, and having somebody and a community to, you know, to brush up against and rub ideas with, you know, is better than, you know, trying to be in your own world figuring out what means what. And that's it. It's Tuesday. We'll see what happens tomorrow morning. Interesting, we have the Fed tomorrow, so we'll see what they say. It's not supposed to be a big event, but we shall see. And we'll just keep taking it day by day as we get earnings and we figure out, you know, how to trade these ranges and be stock specific, not get hurt, and, you know, and take advantage of the opportunities in front of us. Have a good night.